let's see here. Whoa, smaller. Let's go. There we go. Hey, what's going on, everybody? Christopher Inks with Texas West Capital coming at you live here a few minutes after 11 a.m. Central Standard Time on Friday, the 3rd of November, 2023. Hope you guys are doing well, guys and gals. We've had a heck of a week, right? So we're going to talk about that today. I've got FiboSwanny. He's going to be on here. We've got a hard stop probably about in an hour or so. FiboSwanny's got some other plans he's got to get to, and then I've got something I've got to do as well. But in the meantime, we're going to pump as much information in here for you guys as possible in charts. We had an incredible up week for stock indexes. The end of last week, everybody and their grandmother was trying to fearmonger you on social media, saying that, basically the end of the world had started. Wouldn't be surprised to see a limit down on Monday. And of course, we've done nothing but rally over 5% on the S&P through this week. And so it's been up, up, up. Today, jobs numbers came out. We saw they came in soft. We had 180,000 expected as far as new jobs. We got 150,000. Unemployment was expected to remain at 3.8%. It went up to 3.9%. And the markets liked all that, because what does that mean? That's just continual information telling the Fed that, hey, which was the other thing. The Fed paused for the second time in a row this week. And I think they're done. It looks like they're probably done. We'll take a look here in a minute at Treasury yields and T-bond futures. And again, I've shown you those before on the larger, weekly and monthly kind of time frames there. And we did just above my target. I mean, like very little above my target there on the yields, and yields are dropping pretty good. I believe it's this week. And then, of course, this month already, we've got a great looking T-bond futures chart going on there. So lots of stuff going on there. Good to see you guys show up. I see Data. I see Soren. I see Aardvark. What's going on, guys? So before we bring on Fibo here, let me just show you real quick where is it here? The bond charts I was talking about here, something I've shown you guys before. Whoops, let's do something like this here. There we go. And so as you can see here on the yields, I had that 4.977 target. We hit, let me see here. Actually, I had the target, it was like right below, like 4.975, I think is what it was. We hit 4.977. It was just under 5% was what I was looking for. This is the monthly, by the way, not the weekly. You can see that we're breaking down below local support there. So my expectation, we do have this nice bearish divergence here on the monthly, and then again locally as we got up here. And so I think I think we come on back down here at least about 3.25, and we'll see what goes on at that point. But I think that's kind of where we're headed with Treasury note yields. T-bond futures here. This is the monthly. As you can see, we had talked about this. We got the support at the S1 pivot that we were looking for. So far, we've got this bullish engulfing monthly candle. We had a spike of volume at the low here, which is what you want to see, and then some, wick left there at support. We can see that we've got bullish RSI divergence here from October of last year until October of this year, so a year long bullish divergence there. So we're going to see if we can get some rally up off here. So potentially Treasury bonds bottoming here and yields topping. And so, that's what we want to see there, right? One other thing here real quick I want to talk about. I talked about MicroStrategy here and how we were looking back over here for a rally up off it. It's done incredibly well, as you can see. I've got that target up there at, let's get this off here, at 486.68. And so that's off this low down here at about 315. Was about where it was at when I talked about it. So great rally there as well. But as I said, we have FiboSwanny showing up here today. There he is. I can see him. Looks a little cold up there in Kentucky. How are you, man?
Yeah, not too bad. Just trying to stay warm, that happens.
I'm sure it's nothing for you guys up there. You're used to all that cold, right?
Oh, yeah. I'm usually sweatshirt weather all through winter, so we're good.
Oh, man. Okay, great. So I know Fibo, he was talking to me about, this possibility. Maybe we see, that there's a possibility that we could maybe see Bitcoin, pushing toward 50,000 by the end of November or even the end of the year. You guys know this is something I've talked about earlier in the year as a possibility once we cleared 32. And so Fibo's going to probably give us a quick walkthrough on that, I think, today. And then we'll look at some of his charts here and see how he's doing, see what he's looking at. And it's basically Fibo's day. So
I basically had that. I mean, I had a 48K target. Originally it was supposed to be the end of June, which of course didn't happen. So it just kind of stalled out. It definitely had a correction to it, but it never really broke bullish structure. So really that 48K call is still in play. It's just taking a lot longer than expected. Timing is always the toughest, but that's the way it kind of goes sometimes. But as long as the bullish structure is in play, I still think we can hit that 48K, but I can show, a lot of different things on charts to possibly get there. It's not going to be 100%, but no guarantees in markets, right?
Right, and that's the whole thing. Exactly, right. We're not saying it's definitely has to happen. Just like we did, you didn't say that it had to happen by the end of June for 48K. We said, listen, if it's going to, we can see it doing it. Here's why. And so same thing. We're kind of looking here, guys. As Fibo said there, really there are no guarantees in trading. As you guys know, I don't usually do timing. Because I've just found, it doesn't really work. It's pretty inconsistent. I sit there, I trade levels, and Fibo pretty much does the same thing. And we say, okay, we're just watching levels. When it gets there, it gets there. We take profits, we enter, we do whatever we're going to do, we short. And then
I do a lot of timing studies, but I look at it as a lot more like a technical analysis, 300, 400 level type math. It's not like when you start to get into cycles and all that, it just gets to be a lot. It's not something that you can just teach a beginner. It's something that for us guys that have been doing this for a long time, we still struggle with it. It's not an easy thing to do. But again, macro calls are fun, and sometimes it's good guidance. And as long as, key support levels hold on the way up, those targets still remain, but then again, we have a lot of trading that goes on, we got a lot of ins and outs before it even gets to that 48K. So, and there's some people that are still waiting for the bull market.
I feel for them. It's tough. I talk about all the time. Emotions are tough in trading, right? We're human beings. We're emotional, just by nature. And, it kind of sucks, a certain, big follower, a big account, with almost 800,000 followers says, hey, listen, I haven't shorted anything since, 50,000 or whatever. And I haven't bought anything since the low. So, we're talking about 2 years. If you're call yourself a trader and you haven't traded in 2 years, I'm going to argue you're not a trader. You miss so much opportunity. And so, it is what it is, right? But what do you got here, man?
All right, I'll start on the 4 hour, and then I'll start getting a little bit more into the 48K call. First of all, so far working really well. We broke into the bull zone back here on whatever day this was, 16th, October 16th, maybe. And then we, got a nice little run going. We actually hit the first target here on this blue at the 200% at 33,762. So that was good. It never went back, even though that if you look at the fibs on this latest threshold here, when it made this high, it still didn't make it down to the shallow fib where it was here. So another thing that I do, if it doesn't get back down on a correction, is when there's 3 consecutive settles above whatever that previous target was, I actually re-enter the market. So I actually re-entered the market after 3 settles above. So I'm back long again, just above this level, with the next level targets at 37.5. And then, of course, the 48.9, which is that 48K area that I've been looking for here on the 4 hour. So, and these targets come from, you got to go way back in history here on the 4 hour to get, I can't even get back to it right now, but but that's where these fib extension levels come from. This is the 127 to 141 that I normally look at, and that's that zone. And there was a previous significant level within this zone is where that 37.5 comes from. So that'll be that next level that I'll take profit off of the longs that I have. and hopefully, if it gets up to that level, up to around that area, the shallow fib would be around 33.5. So if it ends up coming back down there, that would be a rebuy with the 48K in play here on the 4-hour. But right now, everything's looking good. Real nice trades off the bull zone. Momentum started kicking in. Even though we've come back down here and kind of tested this little trend line I just drew in here, the buying interest has been along this line, and we're still maintaining the bull zone. So I mean, the momentum's went a little flat. So most likely we're going to continue to consolidate above this trend line. So your support and resistance is the previous high at 35.9 or almost 36. And then the trend line is probably right around 34 or so. So between 34 and 36 is still going to be that range that we should trade in. As long as we hold this bull zone and the momentum still, stays sideways, I'm just going to wait for that breakout to the upside as we're maintaining that support. So that's where I'm at on the 4-hour. So had a real nice trade, had to get back in long again. So back in the money a little bit, but hoping for a little bit more upside on that. So when we flip over to the daily, same kind of thing, went into the bull zone right here, a little bit sideways here for a little bit, never went back into the bear zone. Then we started cranking, got some momentum going, got that nice little run. But same kind of thing here. I'm waiting for the shallow fib here. This one's at 32, basically 32.3 or so. If it does end up coming back here, I mean, I wouldn't be surprised if it came down to that level before it heads higher. I mean, because you do have a little bit of a bearish divergence on the daily. So I wouldn't be surprised for a little bit of a move back down to that shallow fib before it heads higher. But I also wouldn't be surprised for it to kick right back in and go back higher anyway. But that's why I'm long on the 4-hour, just to keep some exposure. So if this does want to continue running to the upside, I have some exposure on it. So that's a good thing there. Moving over to the weekly, and this is where a lot of the that structure that I talk about has been maintained. So ever since we had that low at about 15.5, which was an area that, if you followed me back then, we were buying pretty heavily there because for a lot of different reasons I can't show on in this call, but but that was that first area buying. I think you had a lot of different charts that you were looking at. It was also an area of buying. But once it broke this trend line to the upside and came back and retested and started this move to the upside right here, that's where that 48K came into play. I thought it was going to continue to run and break and get us up to that 35 on this run right here. It didn't happen. We went into this sideways, just boring for a long time.
7 months. Yeah.
So, but the thing is it maintained at least the 61.8% level here. Never really closed 3 consecutive weeks under it based on where it was at the time. But now we've broken up to the upside. What I'm looking at is the 61.8% level right here that basically tagged my Fibonacci level or my 61.8% level based on when I start my bearish zone. So when I look for that first positive change on the ADX before it actually happened on the threshold. That's why I'm starting it at this level. And then we went down to the low. So the 61.8% level was basically tagged pretty nicely. Selling interest at that level didn't surprise me. It's a good spot right there at 36K to find some of that selling. But I'm looking for a break here. Even if we come back down to the shallow fib and then work our way back up, it's still, still maintaining that bullish structure I like to see. And then, of course, the zone that I'm looking for is the 100% of where my threshold was, and that's right around 47.5. So you can basically round that up to 48. And then the trend line objective is around 51.6. So somewhere in that range is where I think we could get to. Can it happen over the next month? I think it could. If we break that what is now resistance and flip it to support, there's going to be a whole bunch of FOMO coming into the market, I think. And you also get into an area that once you break a 61.8% level, probability goes pretty high that it's going to go to a full retracement. And you don't really have a lot of area in here to really kind of hang your hat. So you get into this zone. I think you probably see it better, like on the monthly here. The 38.2% level is like right there at 35,912, and that's where we tag that high. I got this. The November risk range is what I'm looking at. Yes, can we go down back to the trend line before heading higher? Of course, but I do like that if we end up getting the momentum, and right now with the 4 hour and the daily and everything still maintaining that structure, I'm hoping that we can keep pushing it, and then it'll bring in more buying interest and new buyers into the market and break this. And then we get into this area here from 35 to 48 that is just an area that there's just not a lot of areas to put in a lot of key selling resistance. So if we do end up breaking that, that's why I'm saying, can we see 48K in November? Yes. If we break the 61.8% level on the weekly, it's the 38.2 here on the monthly. If we get both of those broke, that's when the buying interest come in. And then I have the timing of these lows on the monthly here. This one missed by a little bit, but all the other ones hit very nicely. And this would be a December low. So what I'm looking at is if we can get that major November up, and then maybe we sell off into December. Now, when it says a December low, that doesn't mean it's going to be lower than we are today. It could be lower from hitting a 48K high, or we end up holding here and then we just come down and make a low before heading higher, later on. So what I'm looking at is this area right here for the November risk range. And the reason that I like if it breaks the level, because it's going to be really hard to see here, but let me blow it up. A couple of times back here in history, when you look back at when the trend line broke, and then the trend line broke right here, once the 38.2% level broke, it went straight to the 61.8% level. So, and this is basically a weekly chart. So it took a couple weeks to get there. So once it broke, so if you go back to even this time way back when the trend line broke, the 38.2% level broke right here and went straight to the 61.8% level in about 2.5 to 3 weeks. So if it's going to happen now, where we are today, same kind of thing. If we can get above this 38.2% level right here, I think we can move up to that 61.8% level in a good 2 to 3 weeks. If it happens, this is a big if, but if it happens, that's why I think that 48K in November could happen if we break this resistance. Now it's going to take some buying interest to get there, but right now it's looking decent. We're holding the bull zone on the 4 hour. We're holding the bull zone on the daily, of course, maybe a little bit lower, but I like where we're at on the buying interest that's in the market. Are we going to get it on a dip? Are we going to get it on a break? I think we can get it either way. So if it dips back down, I'll be buying at shallow fibs. And if it breaks, to new highs, maybe I'll layer in and get even more long. But that's where I'm at on BTC. So kind of running through it because I know we don't have a ton of time, but hopefully you got something out of that.
Well, I mean, the fact that we went sideways for 6 or 7 months there, and then we popped out, and now we've consolidated for about 2 weeks. I mean, sure, it could pull back and retest that multi-month consolidation, but in either case, we should have a lot of continuing strong buying going on because we were so long for sideways for so long. So I think that kind of adds in there with what you're talking about as well.
Yeah, and just looking at like a quick little trend-based extension. If you go just from this to the high, and then you call this the low here, the 61.8% level is right here, and then it pops up to 41.25 or 41.2. That could be like a break there, come back and retest, and then go higher, that kind of thing. But I'm just that's just roughing things in. It's nothing major about that. I'm just kind of looking at, and another thing I was looking at was this low right here, and then this low right here. When you come down to the RSI, you can see that when this made a lower high, or I mean a higher low. Maybe I need more coffee. This is a low, and then you had a higher low right here, but the RSI went the opposite. So basically, to me, that it's a little bit, it took a little bit more sellers to not make a lower low. So that divergence there could be I actually use a formula that I calculate. I take the close of whatever this was, and you take the close of whatever that was, and then you take the close of the high. There's a formula to see where that target would be. That
Mhm.
target is actually where that 61.8% level. So that
Nice.
target to that move to the upside already hit based on that formula, which makes sense because you got the 61.8% level. You
Right.
got that formula. You got a lot of areas that selling interest should come into the market, and that's what's happening. But it's really not selling off all gangbusters or anything. It's like that's what's making me think that we could actually find some more buying interest before to get us back over that hump to off to the races. No guarantees, but the way I'm looking at this, I just like the way it looks. I mean, I'm not seeing a lot of bearishness in a lot of different ways I
Yeah.
look at things. Not that it can't not that it can't retrace back to some support levels, but if it does, then I think everyone and their brother is going to be like, "Well, I didn't get it the last time it hit 32, so this time I'm going to buy it." And then
Now,
you're going to have
hopefully they
everyone.
will.
Yeah. I would think because that 32 was a pretty key level.
Yeah.
Um, and to me, psychology on breaks like that are we jumped up to 35, so everyone's pissed that they didn't buy it at 32.
Yeah.
So if it gets back down to that level, the people that took profit up to these levels, like us, hitting our target levels, we've sold, took some profit. If it comes back down to the level, we're going to rebuy.
Yeah. Yeah.
And
It's
I
a great
think
buying
everyone else
opportunity.
that didn't buy the first time is going to rebuy. And I think that's where that buying interest comes in from a psychological standpoint. Not to say
Yeah.
that's exactly what's going to happen, but I could totally see that happening on a retrace. Or if it breaks out, people are just going to FOMO in because if we get past that previous high at 36, then 40K, 40 plus is going to come in pretty quickly, and I think people want to get on board before that happens. So
Yeah, real
that's
quick
where I'm at.
before Fibbo continues on here, guys. Listen, pay attention to what he just said. You notice he's talking a lot about psychology, right? And he's talking about what people generally look at and what kind of happens because of emotional things that happen, right? And this is the same thing I talk about all the time, which is that TA. A lot of people get in, they think, okay, TA technical analysis is about lines, right? But it's not lines for the sake of lines. These lines are a product of what's going on psychologically. Again, Fibbo and I both come from the idea of social mood, and what we're doing in the aggregate as far as market participants and how they're feeling, right, emotionally, what that's created, causing them to do psychologically. And so our lines, either way that we do it, the way that I do it, the way that he does it, it's always predicated on not lines for lines' sake, but understanding that those lines and those targets and those fibs and all these things we're using are a product of what's going on with the human emotion, what's going on with the human psychology, because human beings are predictable, they're forecastable, their actions are. Doesn't mean you're going to get it exactly right 100% of the time. But what it means is once you understand, like truly understand that, it opens up a whole new world when you're looking at the charts. And all of a sudden, you go, okay, well, these fundamental guys are coming up and they're saying this, this, and that. Well, okay, but as Fibbo and I tend to tell you, the news is already in the charts. And that's what we mean, because whatever the aggregate is feeling, they're going to buy or sell based on those emotions. Human beings buy or sell based on emotions. We're going to lie and say it's logical. Almost all the time, it's not logical. It is emotional. And because it's emotional, we're able to use that because human beings tend to work in a certain way emotionally, psychologically. We're able to forecast that. And so if you want to be a technical analyst, if you're trying to be, then the first thing you need to do is understand that the lines are not there for lines' sakes. The reasons that the lines are there, the reasons price moves like it does is based on that psychology, on that emotion that human beings are using. So, yeah, I think nobody ever told me that when I first started. Had they done that, I probably wouldn't have listened at first. But it's one of those things that when I look back now and I go, man, what are the things that if I was really listening would have helped me out a whole lot when I first started? And that's a banger right there. It's one of those big things.
It is absolutely huge. Once that happened and it clicked a light bulb in my head, it was a major game changer for me,
Yeah,
for sure. It's
definitely.
not an it's a really tough thing to teach, but it's something that you just got to kind of keep getting at it and getting at it and practice it and learn what lines historically matter, which ones don't. It's an experience thing. So you're basically trying to teach experience, because some people will ask me, well, why that trend line? And I don't look at it just because it's lows. I look at it from an area of why the psychology changed at that point in time.
Yeah.
And I look for the proportions and what people are doing. So it's, and that what it really comes down to is that's where the bull and bear zones really come from, is looking back historically and finding those psychology changes in the market that basically are areas that people don't see when you look at the surface of the chart. You got to kind of dig in and find out where those psychology changes are. Now, am I going to get it right every time? No, but it's definitely a good guide to know when that
Yeah.
social mood is changing. And right now, social mood is changing. I mean, we broke out from that 32K to the upside. Now,
Yeah.
all of a sudden, you know, everybody's mindset's completely different than it was a month ago.
Right. Right.
And the charts are showing that. They're showing the support happening on every little retest to the downside.
Yep.
Buyers are being found earlier than they were before. That's just, that's the way charts work. And so far, the way I look at it, as long as that bull zone's holding, I love it. Let's keep
Yeah.
going, keep cranking.
Awesome. What other charts you got there, man?
What else I have up here? I mean, I got Ethereum. Ethereum's still in the bull zone also. Had a good trade. Um, Actually, this one actually worked out pretty decent. Went up, got into our zone here between 1818 and 1852, and hit the target. Came back down and actually rebought at a shallow fib. So I'm actually long again, going north, and my next target is that 1989. So I'm still holding out for a move to the upside, and then I got some other targets to the upside based on fib extensions, if it continues the trend. What I'm hoping to see is something along the lines of, just looking at, just from my threshold to the high, back down to the low here. These are some other targets to look at if you want to look at it from that kind of mindset. So same kind of thing here is we need to break this high just like BTC to get some momentum going the other way, because right now the momentum's still flat, but it's sideways to higher as long as we're still in the bull zone here and it's still maintaining there. So that's good to see. And then on the daily, same thing. We went into the bull zone, and still just kind of going sideways, but sideways to higher with upside targets there also. So when it comes to ETH, I'm long on that one also at the moment. Just waiting for some upside targets. And the beauty of it is, and I know we talk about this all the time, is just maintaining your strategy. To me, if it ends up breaking down, here in the near term, if it ends up breaking down on the shallow, coming back down toward the shallow fib, um, you know, it'll break that back down to the bear zone. Maybe get me out a little bit positive, but then again, if I get a little bit on the negative side, that's part of the plan. If it breaks back down, I'm back out. Maybe a small loss, maybe a little bit of a gain. It depends.
Yeah.
Or it rallies on out, and we make some money. And that's the whole gist. Low losses and large gains.
Yeah. Exactly.
And then I follow gold. I don't really have much on the 4 hour, because I didn't trade the 4 hour. I decided to trade the daily instead.
Mm-hmm.
But I mean, we still have the bull zone maintaining the structure to the upside. If you're long, your next target's going to be up here around 2068, maybe 2043 on the trend based extension, but 2068 is an area to look for. But I'm looking at the daily at the moment. The target off of when it went into here hit rather quickly, but then I rebought right here at the shallow fib area, waiting for that next target at 2027, which is an area back here that was significant. Not so much on the daily on other time frames, but that's where the bottom of this zone between the 127 and 141 comes into play. So I'm long on gold here. Bulls are still in control a little bit here. Bull structure, just waiting for a nice little upside target. It's been kind of quiet. It did kind of come off a little bit of profit taking right here, but still liking the support on gold. My other charts are DXY. DXY on the 4 hours went to shit.
Yeah.
I'm not really doing anything on the dollar at the moment. Is as strong as this is to the downside. I mean, we are getting oversold, and maybe this zone right here between 104.48 to 104.71 would be the buy area if it gets down into this oversold. And what I'll look for is a move back up, out of this area down here and back up into the bear zone as a possibility of a buy. But right now, I can see it kind of moving down into this zone. I highlighted this whole area because I really don't want to buy it until it gets down to 103.53.
Yeah.
Because I think what will probably happen is being strong in the strong bearishness, maybe a move back up to the shallow fib, and then further down. So the trade for me would be a buy here and then sell at the shallow fib to move back to the downside. So when you look at the 4 hour, the 4 hour is just pretty ugly. And that's what's kind of kept me from not buying right here on the daily, because right now it's still in the bull zone, but it's just testing this. And of course, it's the daily. We'll have to see where it settles. But given that the 4 hour is extremely, extremely strong to the downside, I was going to kind of wait to buy here. Normally, I would buy the shallow fib at 105 and probably 105 and a quarter. And then if it ended up going into the bear zone, I'd have to wait for 3 daily settlements below that line. But I'm just staying out of it because it's just this is where kind of experience kind of comes in.
Yeah.
Even though it hits the shallow fib, is it a buy for me? That's where it's like you don't have to take every trade, but in reality you should. But for beginners you should, because you don't want to miss certain trades and that kind of thing. And then you just take your loss if it happens. I just don't like where it's headed at the moment. And if it's going to have the inverse correlation to Bitcoin, that's also going to be helpful. I don't know if that'll be the case, but we'll have to kind of see. But right now, we'll have to see how this daily ends up. If this ends up getting underneath here and we get into the bear zone and we get 3 settles, then that low 103 area, which is that 103.53 area down in here, that would be my first spot to even consider a buy. So that's where I'm at on there. And then lastly, great trade on the 4 hour SPY, which is amazing. We broke into the bull zone and had a real nice run to the upside. Hit our first target here at 43.48 because we ended up buying basically the third settle above was about right here. So 42.60 area. And then sold it back out at 43.48. I don't know if you guys know futures contracts, but that's a shit.
That's nice. That's nice.
That's a nice trade. Actually went up above it a little bit, but we're getting pretty overbought on the 4 hour. So I wouldn't be surprised for it to come back down. Because when you look at the daily's still in the bear zone. It's worked its way back up well above the shallow fib here, not making a new high, but it's also higher than the last time on the RSI. So that divergence there is saying, hey, if I was in that 4 hour and I didn't take profit, maybe you should take profit because it could start to sell off here, work its way to the downside. But right now, if you're in my 4 hour, you already took profit. So the two things you'd be looking for is either a shallow fib buy, which is at 43.22 basically, or if there's 3 consecutive settles above that previous target. In other words, we got about 2 hours to go to see this candle. And then that third candle, if that third candle settles above 43.48, then maybe you want to go long and maybe extend that into maybe 44.30, which would be the next target. Risky, but that's one thing you could do. Or me, as being a little bit more conservative, I'm going to be conservative and wait for that dip to the shallow fib before I buy that 4 hour again. But that's where risk management comes into play based on your risk tolerance, your books, based on how much exposure you have and other stuff, all that kind of stuff. But
nobody ever lost money taking profits.
Yeah, and a lot of people will say, yeah, you took profit at 43.48 and it's 43.85. Don't care.
Yeah, I mean, look what the profit was, right?
Yeah,
you worried
exactly.
about the little bit extra
I don't care.
rather than the big whole thing. Yeah, but that's the thing that often catches young traders, novice traders, right? They go up there and they're getting where they should take their profit, And then they're like, oh my God, but what if I miss out if it goes up another half a point? Oh my gosh, you know, and then they don't get out, and then it dumps on them all of a sudden. And just like that, you know, they lose a lot of what they had already gained. And then they psychologically, emotionally, they're unable to commit to actually selling and getting out of the position. So it continues to lose more. And this, I mean, everybody that's listening, I'm sure they've gone through this so many times before. I know I did when I first started trading. And it's the absolute worst feeling. You get a great profit and you just know you should have locked it in, but then you got greedy and worried about, oh my God, what if I miss a couple extra points, you know, and it ends up turning against you, just kind of killing anything you had. So like I said, you know, nobody ever lost money taking profits, right?
Yep. And usually when it starts to come back the other way, everyone starts freaking out. And that's where the psychology comes in, and the selling interest comes in rather quickly. And the next thing you know, you're underwater because everybody else took profit faster than you did.
Yep.
So
the goal is to take profit when it's strong, guys. The goal is to buy when everybody's weak, when everybody's trying to sell, and then to sell when everybody's jumping in there and buying, you know, toward the end of the trend. You want to sell into strength and buy into weakness.
Yeah, and you sell based on your plan. This says target. It doesn't say target maybe. No, it's target. That's the take profit target. And it's not like, well, it's a target maybe, you know, it's target. And I mean, yeah, it definitely went up a lot higher. And I mean, it sucks to lose a little bit more on that, but the gain that you made off the original plan is what you want. And then you go back and say, hey, is there things I can look at differently to maybe change the way I set the target? You know, then you can reevaluate your whole strategy. But when you back test, you know, this is my threshold theory. So when I back test everything, I haven't found anything that gives me better returns based off where my targets are. So my targets are my targets, and I'm not changing them until I find a good reason on why I should change the way I make my targets. So,
well, trading is all about consistency, right? It's not about a single trade.
Yep.
Yeah. So if you guys are listening, pay attention there. You know, it's the same thing I keep telling you. Many times traders get hung up on the individual trade itself, and what you should be working on is your system, because it's about the consistency over time. If you're consistently locking in significant moves, you don't have to get the last little bit at the end. It's nothing really. If you're consistently locking in those significant moves along the way, you're going to notice you're a heck of a lot higher up than you would have been had you been trying to, you know, milk out every last penny of every move there. So yeah.
The coulda, shoulda, wouldas it's a pretty big thing emotionally in trading for sure. Man, I should have done that. I should have done that. No, stick to plan and reevaluate. You know, people journal. I used to journal. I don't do it as much. But if you journal your trades, one thing I wrote down was, you know, how I was feeling at the time, you know, psychologically. You know, what was I doing at this point in time? Why didn't I take my target? Like, what was I thinking? Like, what was going on in my head? Was I just being greedy? And if that was the case, then that's a failure on my part. My failure was not taking the target when my target told me to take it. And I had to learn that way. I mean, everybody does. It's like so many times in the past, I was like, yeah, I can get another 2-3%. I know I can. Because momentum's strong, right? Momentum's strong. And then if I go away and I take my eye off the ball, and the next thing you know, I'm back underwater. I'm like, damn, I lost that one. But I mean, that's a learning experience. So I take targets, and if people ask me why I didn't wait because the momentum was so strong, I'm like, I don't want to wait. I like to stay above water and trade another day.
Yeah, no, I mean, exactly. And like you said, I think we all kind of go through that. You know, at some point, it's just kind of part of the, you know, the overall experience of being a trader. You know, Fibbo and I, we come on here, guys, and we give you a lot of, I don't know if you're catching it. I keep trying to remind you every week when when I'm talking, or when Fibbo's here with me and we're talking, that the best thing that you guys are going to get from us, the things that are going to make the biggest difference in your trading, is not the systems we use or how we do it. It's the actual acceptance and understanding about how human emotion and psychology plays out, and about the things that you deal with. If you're honest with yourself, and you've got to be honest as a trader, because you can't correct anything that you're having trouble with if you're not honest about having that trouble to begin with. So, you know, Fibbo and I, everything we talk about, these are things we've gone through. over the last few decades, especially back when we first started. And if you're fortunate enough to make it, a decade or two or three or whatever as you're trading, you pick up things and you pick up the important things. And most of you will probably have to.
Too, right?
What was that?
It works in life too, not just trading.
Yeah.
Exactly. Just thinking about this, like, everyone's went and bought a car, right, in their life. Not everybody, but like, you go and buy a car, right, and you're sitting there in the showroom or whatever, and or on a used car lot, and you're looking at this car, and you're like, oh yeah, I want to buy this car, blah blah blah, and you go ahead and buy it, and then 3 weeks later, you're like, should I have done that? Like, so what you need to do is you need to go back and say, what was my psychological state at that point in time? What was I doing at that time to make that purchase? It's the same thing in trading. Like, what am I doing right now? Does it make sense for me to go and buy this right now? Does it make sense for me to buy this car right now? That's a life experience. So to me, trading's the same way. It's like your emotions are going to ride no matter what you're doing. Your emotions are going to ride high when you're sitting in that new car and you're like, yeah, I could do this.
Feel cool.
It's the same kind of emotion when you're looking at trading. Should I buy this based on the emotion? And a lot of people get caught up in it, like FOMO, for instance.
Yep.
It's like, yeah, I want to get in here. This trend's rock and roll. I can make a ton of money. And you jump in for the wrong reasons because you're doing it from an emotional state and not more of a logic. Like, there's a better reason for doing things. And of course, we're all going to get, hit different ways that way.
We're humans. We're all humans.
Yeah, exactly. So, you can come up with a bunch of different examples in life, but and I hear you say that all the time. And I think it's really, really important to know that if you don't have your head on emotionally straight in life, you're going to have a really hard time trading because it's the same thing. It really is. It comes down to how you carry yourself in your buying and selling in your own life. Than when it comes to buying and selling in the markets. I know it's a really hard thing to teach. Don't get me wrong. It took me years to figure this out.
Yeah, this isn't anything we got overnight, guys.
I still make mistakes all the time, but I don't make them as much as I used to, in those first 3 to 5 years of trying to figure this thing out. We all make mistakes, but you can really learn from them over time to where you'll make them less and less.
Or when you make them, they're not as big a mistake.
Yes, exactly.
What it is, you limit
and you recognize them a lot quicker too.
Yes,
you're like, like you did something, and a day later you're like, oh damn, I did that wrong, and you know what you did, and you learn from it. It's just those kind of things, and it adds up over time, and you figure it out.
Yeah, expanding on what Fibbo was just saying there, guys, about being emotional. And again, that goes back to what I said at the beginning. Human beings tend to buy and sell on emotion. Very, very rarely is it logical, just in general. And so when it comes to, like Phil was talking about, journals, and you figure out, oh, why did I do that? What was my, my emotional state at the time? And one thing I'd like to add on to that, that I usually talk about, is the fact that pay attention to what's going on earlier. What's going on earlier in the day or earlier in the week. Did something really good or something really bad happen? Because that is going to have a lingering effect, and I hate to bring it to extremes, but if somebody passed away, somebody close to you, you're going to be feeling down. And that's going to change your emotional state when you're trying to trade. Or if you buy scratch offs, and man, there's $1,000 winner right there. Woohoo! Pay $2, won $1,000. That emotional over exuberance is going to have the same effect, the same negative effect on your emotions when you're trying to trade, right? And so remember, guys, it's not just feeling bad. It's not just bad emotions. It's also overly good emotions as well. They both affect your trading the same way. They both distort your emotional state when you're looking at the chart. And so, if you notice that you have something really significant happen and it's changed your emotional state, whether it's good or bad, if you're not really good at controlling your emotions and understanding that they're there and they're happening, sometimes it's best just to stay away from the charts until you come back down to that equilibrium. To that equilibrium.
Great point, dude. Great point. I never even looked at it that way, to be honest. Even in my past, to look at hours or days before making big decisions on buying or whatever. That's a great point. I mean, you need, I need to highlight that more in my group too, because that's a game changer. I never really thought about that because like your scratch off example, if I go and buy a scratch off and I win like $1,000, all of a sudden you're going to be like, the statistics don't matter anymore. I'm just going to go buy more tickets because I'm going to win.
You feel good.
Because
You feel
your
great.
mind is not there, but the probabilities don't change. They're the
Right.
same. But in your head, your probabilities are like, oh, this is going to be a lot easier. I'm going to learn. I can win a lot more.
Yeah, you got that dopamine fix.
Yeah, exactly. But it's something that happened, way before you're making the decisions because you're still riding that high.
Yeah.
I never really thought about I've always thought about like where my state was at that point in time, but it has a lot of factors of what it could have happened 2 days before. And I never really thought about that. So that's a really, really good point.
Yeah. See, Fibo agrees. If Fibo agrees, it's got to be good, guys. You see how it works?
Well, I don't know about that, but I mean, I've done a lot of journaling in my past, and I never really went back, like prior days or prior time to really get a good gist of that. I did, and if I did, I probably could have learned a lot more. See what I mean? You learn every day. I've been doing this forever.
Right. I do it, and I've been doing this for, almost 28, 30 years now. And I still, every day, guys, I don't claim to know everything there is to know about trading. And I've put in a lot of time and effort and money spent on mentors and coaches and courses along the way just to get different views of how people look at it. Right. But every day I still try to find some new way of looking at price action, of understanding psychology of just in general, as well as, trader and market psychology. Because, again, I say it all the time, you can't be one way in every other part of your life, emotionally, mentally, and expect to be something different as a trader. You can't go through your life believing that you're a victim, that, with that, oh, why does this always happen to me kind of mindset, right? You can't do that and then expect to get to trading and go, okay, yeah, well, I'm going to be a successful trader. Because your default, the way you view life is you have no control. And to be good at trading, you have to understand that you can affect positive change in your life, that you do have control. Now, some things are going to happen along the way, but your focus should always be on not worrying about the things that you don't control, but understanding that you need to focus on the things you can control. How do you react to what happened? How do you learn from it? As Fibo was talking about earlier, make sure you're learning. Mistakes are not a bad thing unless you're not learning from them. If you're going and repeating the same thing over and over again, well, you're going to have to work with yourself there. But again, all these things that we talk about in trading, when we're talking about psychology and the mental side of it and the emotional side of it, are 150% applicable in every other area of your life. Just generally, business, relationships, employment, any other skill set that you're trying to learn and perfect as well. So, by the way, guys, hey, listen, you can join us at members.texaswestcapital.com. We got so many ways for you to get in there. You can jump in. We've got a really inexpensive welcome to the community kind of base level for $11.99 a month. I think we've only got about 54 seats open at that price, and then it'll go up. But that gets you, your Bitcoin, S&P, Euro USD updates throughout the day, during the week, Trader Foundations course, some other things. You can get in with Fibo as well over there with his threshold theory. You'll see the link for that at members.texaswestcapital.com as well. Or if you're serious about really just getting way on into this market forecasting and being able to understand where the macro bottoms and tops are, being able to understand structure from a whole new way, the way that I do it, you can jump into our group coaching there. And when you do that, you also get access to Fibo's threshold theory as well. So, we teach price action on that, which I lean a lot toward ICT and then my own things I've added to that. Like I said, other shorter term trading as well as with Fibo, with his threshold theory and some shorter term swing trading with that. And then you're learning how to correctly implement Elliott wave theory and the Wyckoff method, and learning as much as you possibly can along the way. We teach so much about market psychology and trader psychology and all these things I talk about. so that you can forecast these much larger rallies. I mean, again, guys, I don't know if you understand this. I know you guys have been paying attention, but, I was talking about the low for Bitcoin, in 15,000s there, but I was talking about from June prior where we had the first low and how accumulation had begun there. And then I outlined it as the months went by. Those of you that follow me have seen it, as we've continued to go up, right? And so had you been in there, you'd be 130 somewhat percent in profit on Bitcoin, just to buy some there and risking 1%. You'd be up something like 18% or 17% right now, risking just 1% of your capital. Saul got that in there, did that live on the Wendy O show on December 30th of last year, about $9.50. If you got in that, you'd be up something like 27% or 30% or something like that, risking just 1%. Link got you guys in, told you before the drop happened, before the breakdown below the range, I said, explaining to you guys right here on the show that it's accumulation. This is why. This is going to be a spring. That's where you want to buy it. $5 and change, you'd be up another 27, 30% there. So effectively, you would be up just on those 3 trades alone. You would have risked only 3% of your capital, guys. And your account would be up over 75%. That's just those 3. We're not going to talk about, by the way, the group coaching, we also have hot takes, which are great trade setups. And so back in, I don't know, June, for instance, you could have been up like huge on Coin, Mara, Riot, CleanSpark, Hut, those ones that I posted back then. We're rallying well last few weeks here. I'm just trying to think off the top of my head, different trades like Amazon and Microsoft and, again, the one I showed earlier there, MicroStrategy, stuff like that. So, it's an insane place to really learn if you really want to learn. I will argue that there is absolutely no better place to learn short-term and short-term trading and long-term forecasting than what we do at TWC and with Fibo and everything else. So we'd love to have you guys there. By the way, hit the thumbs up and subscribe to the channel, whatever, if you're watching from YouTube, Twitch. Follow me on Twitter, guys. I post charts on there sometimes, more often than not. But you don't see a lot of nonsense from me on Twitter. So if that's what you're into, you're not going to get that there. You're going to get serious stuff about trading and about understanding how to be a better trader, things that are required. And then, Fib and I often repost each other's stuff on there. So, yeah. But I know Fibo's got to go here.
I got
You got Saul here. You want to talk about Saul real quick?
Well, you just brought up Saul as one of the examples. I just went into the bull zone right here. Definitely had the nice run. Hit the target at 39.65. And again, this is one of those cases that it went up, a little bit further. But again, does it matter when you make this?
Right, exactly.
and right now it kind of missed the shallow fib here on this a little bit. It all depends on how you kind of look at the shallow fib. A lot of times I don't usually do exactly what the number is. Like 37.43 is where it's at the moment. Sometimes I'll round that to 38 or 30 or 37 and a half or something along the range. Yeah, a little bit of a range. I think it still would have missed it, even if not that it can't come back down there and hit it again. But one thing that I'm seeing here is the bull zone's still structured. It's come down a little bit on the ADX, but the bulls are still maintaining this control. So it's another one of those things like you can wait for the shallow fib dip. Or you can buy 3 settles above, which you would have been buying up here. Wouldn't have been a smart thing to do, being on a major run like this. But I would wait for the shallow fib. But again, more upside targets. If this ends up going into the bear zone, then even if you wouldn't have gotten out and gotten this nice bull run and you didn't take your target, which you should, you'd still be long. And even if it goes into the bear zone, you'd still make major good profit. But that's what strategies are for: long, larger gains, smaller losses. Just whatever strategy you like. And not every, my fib theory might not work for you. There's other things that Chris does that maybe there's certain things that click that I do and that what Chris does. And if you fuse them together, come up with your own thing. That's really what it's all about, is to find what's right for you and what you can get your head wrapped around and just become an expert in that. That's really what the big thing. And because there's so many different things you can do, but just take little tidbits from one to the other. Or if you like fib theory, go with it. If you like what Chris does, go with it. But it might not be something that clicks with you, and it might be something, you know, that each might have a little bit of. Maybe it's Wyckoff method, or maybe it's Elliott wave, or whatever. Something might click that works for your individual mindset. And that's really what we're here to educate about is, do I want everybody just doing my threshold theory? No. But it's definitely a good guide that I have found over time to work really well. And if it works for you, great. If it doesn't, you know, I'm here to help you kind of find things that do work. You know, that's
the goal. Yep,
that's the goal.
Let's go.
So,
I know Fibo's got to go here real quick. Michael Johnson, he's in there with us telling us that we've got some of our members that are using Fibo's system and pairing it with like Wyckoff and other things that I'm teaching, and just really helping to add additional support, additional confidence to their trading. And I love that. Again, you know, we brought Fibo in earlier this year, and it's been absolutely great having him there because he just gives that extra bit, looking at a little bit different way and helping out there. But man, loved having you here as always, man.
You too, man.
And you know, I guess we'll probably see him guys in about 2 weeks, unless something comes up on his end. Of course, I'll let you know.
All right. Well, hopefully next time we talk, we're at 48K.
Yeah, that'll be nice, right? We just say, "See, told you so."
I'm not going to quite say that yet, but I'll wait. But because it could easily sell off here. I'm not saying that 48K is a definite, but I wouldn't be surprised either way. Put it that way.
Yeah, exactly. There's a possibility for it there, a real possibility, not just like something stupid.
Yeah. The 48K call back in last November was a little tougher call, but the trend is still going from that point in time. So that's
exactly.
All
right. Well,
thanks.
Fibo's going to jump out of here. I got to see a couple of chart requests here, so we'll jump on those and then I'll be out. Okay, guys.
All
Fibo, as always, man. Love having you on. I'll catch you over there in TWC later.
All right.
And,
peace out.
Y'all follow us on Twitter and whatnot. All right. Let me see here. What do we got? I'll see there's a couple of charts here. So let's go ahead and jump in here real quick. I just want to pull up my, again, the same chart that I've had for quite a while now with Bitcoin. Everything continuing to work out as expected. If you follow me on Twitter, you've seen this chart numerous times as we've continued to build here. You know, again, this was that June low. Where I was talking about it being the beginning of accumulation. And as we were making higher lows or lower lows and highs here, I suggest there's a possibility we could see a dip down in here, a spring or a terminal shakeout. That's what we got. And then, of course, you guys, as you were following, you know that we called all this really well. Only surprise was that we dipped twice here for the back up the edge of the creek. Usually don't get twice. Usually it's just one and going, but that's fine. Worked out well. We continued to maintain that we were heading higher, and that's what we got. So, you know, again, no surprise here. Still looking for the rally up to continue overall. Let me just run through a couple of charts here real quick. Here's the USD yen. And we're finally getting some real kind of movement off this swing high. We had the previous swing high up here at 151.944 where the BOJ intervened. As you can see right over here, this was back in October of last year. So we've got, you know, just over a year later, about a year, like a week later, potential double top. But this is not a confirmed double top until we break below the swing low here at 127.215. And then I posted that here on Twitter. What's that target? If we actually do get that, if we get this breakdown below here, that double top, that should give us a target of, again, let me see what I posted here for y'all on Twitter here, Twitter X, whatever it's called, 106.371, guys. So basically kind of getting down into this area way down here. So, you know, with this big high volume node is down here, that's a long way down, right? That's a long way down. If you guys don't understand, the DXY is a weighted average. And so what does that mean? Well, that means that 57% of the value of the DXY is weighted toward the euro. The next highest one is like 13.7%, I think, which is the yen. And then right below that is the Great British Pound, I think at 11%. And so it's basically, it's like 6 or 8 currencies. I can't remember off the top of my head here again. But that make up this weighted value, right? And so the greatest weight is the euro. And that's why the euro often looks almost mirror to the DXY, the euro USD. But, so if you've got the euro getting strong against the USD and you've got the yen getting strong, I mean, guys, you're talking about 70% of the value of the DXY is the USD down against those two, right? And so, you should be looking for the DXY to drop off there. So a lot of possibility on that, right? Ethereum, Bitcoin here, we're still kind of down at the lows here. I told you we were looking for this potential target down here at the EQ of this green structure. We're trying to pop it up a bit here. Let me see. We had this kind of messing around. I don't like that we've rallied so high here on the Stochh RSI, but you do see that volume is consistently hanging out higher. So there's a lot more interest in this area. So we want to see this breakout. We want to see an impulsive breakout above the daily pivot here at 0.55, basically. If we can get impulsive breakout above that, I think there's a good chance that we break out above this descending resistance here. And if we can do that, next one is what would be wave B here at 0.073625240. And if we can get that, we should be looking up here around 0.12888. And so, again, potentially got that moving. I'm still watching it, still want to see it kind of continue higher off that. Let me see real quick. Somebody's asking about AVAX, I saw. What do we got here? This is the daily. Let's pop this out to the weekly real quick. Let's get this to red here so we can see it. Here we are. This is 1, 2, 3. I mean, this is, ABC is 1, 2. Looks like ABC is 3, 4. Looks like ABC is 5. So this does look like a bit of an ending diagonal here. There we go. Something like that. And so we got, a rally up to it there. Great. And then we got the, big spike of volume, large candle spread on the breakout of it. So if I'm looking at that there, I mean, to me, it looks like we might have a 1, 2, 1, 2, 3, 4, 5, 3, 4, and then 5 here. So, I mean, it looks like it's done. You can notice the curvature of the of this right here, right? And on the bottom as well. And so you're getting kind of this this consolidation from this expansion, right? And so, again, you've got like expansion wide, and then it gets closer here, and that tells you that usually it's getting accumulated. There's less or there's more demand showing up than that supply coming in. It starts to get you go that sideways and looking for that rally back out there. So, by the way, you've got potentially a double bottom here, right here, as you can see. So based on the height there, we do have the breakout. You want to see it stay above that swing high. But based on that, it looks like you probably got a rally up here to around $16.45. You'll notice that gets you right into the high volume node. You got a wedge here. It's getting you right up into the congestion at the top of the wedge. So again, it's making a good argument for the bottom potentially to be in here. If this is a 1, 2 here, oh, look at that, it's 5 waves up to that kind of that what I say here about 1650 or so. I don't know what I said, but it's right there around 1650. That's where that 5 waves up would be as well. So, I mean, I think that's a pretty good target overall. And if we're getting up there, the odds are, again, that's 5 waves up, at least to that point, if not higher. And so we'd expect to pull back and continue and break out higher. And so, like the other alts that are out there, they look like they've bottomed or in the process of doing so. And so, wouldn't be surprised to see AVAX doing the same thing there, right? Let me see here. We had Excuse me. What do we have here? That's AVAX. So yeah, so that's weekly. If we're looking at the daily there, if I'm looking at pivots, moved in sideways between the pivot and the R1. Pivot should hold this support. And I would be looking for this rally up through the pivots here. So again, eventually getting up here around $19, $20, I think is probably a pretty good idea of what's going to happen there. It looks like just a 1 and a deep 2 there. And so, we might get a pull. If we get rejected here, we might get a pullback down to around, what is that? Right around $11 or so. Or the daily pivot here, which is right around $10.60. That would be where I'd be looking for, and looking for a reversal off that. If we can do that and break out above that swing high, the odds are we're going to at least hit the R4, which is 17 3/4, but likely rally up through the R5 pivot here and hit that 20. That's usually the way that pivots generally work on there. Let me see here. Excuse me. TSLA. I got to get out of here soon. I got something I got to do. Let me see here. Asking about 1 2 1 2 looks done, ready for 3. Andrew's thinking here. Yeah, I mean that's that's about what I'm looking at here. We had a pullback to the 61.8, almost a 65. We want to break out. If we can get actually, let me see here. If we break out above wave X 278.98, if we break out above that, we should be good to go. To change that wave 3 target here real quick, since we dipped just a bit more there. But we're looking for that breakout above that wave X, and that'll give us a minimum expected wave circle 3 target here. I pulled that from too far, didn't I? Yeah, I did. There we go. Right here around 572, 573, 572 3/4. That wave circle 3 target. And then of course that larger, excuse me, wave 3 target is right up here, just a bit higher up. So I think we'll probably see this wave circle 3 overextend a bit. And then we get closer up here around 800, 850, somewhere around there for that wave 5 of 3, which again is just further upside, right? So Tesla not looking too bad there as well. Let me see here. What was the other one? Link. Yeah, you guys hear Elliot out there? He has gotten a big voice, I'll tell you what. He just yakety yak when he gets outside. Let's see here. Link. I know we're doing some, we're just doing some consolidation here. Let's drop down a bit lower than what I was looking at. So probably then this right here. Let's kind of get this over here. We might be done about there. If we continue down further, we'll look here around 9.894. That's a 38.2. And then 9.315 is the 50. That I would be looking at one of those. I think we're still doing wave 4 of 3 heading up. If we get a breakout here above wave B at 11,786, that should indicate that the 3-wave correction is complete. And overall, we're heading higher. Now, that doesn't mean we can't be printing a triangle, or we can't go, 3 down, 3 up, and then 5 back down here to do a flat. But what it means is 3 waves getting locked in, breakout above there means ultimately we're going to go higher. We're not done rallying yet. And so from this current low here, that needs to get us up there around $13.06. That wave 5 of 3. But again, we need the breakout above 11.786 there to kind of suggest, okay, we're doing that. Again, whether it continues to print a triangle or rallies up and then 5 down for a flat, and then finishes wave 4. And then we head up, breaking out above wave B from 3 waves down. Tells us that we will be going up higher there. Yeah, so that's what I'm kind of looking at there. Overall, oil, looking for oil to continue down here. I've got potentially a wave 3 of C target here, right around $75. So that's what we're looking right now. We're looking for a breakdown below the swing low here at $80.22 to finish that. But, again, this is just 5 waves up off this swing low down here in, May. So, 5 waves up, A, B working on C down for 2. And then, we'll look for 3 going up, which would end up, if this is a 1-2 and we get that 3, I mean, obviously we're going to get a new all-time high for oil, most likely breaking above that 147 area. So we'll see if this continues to play out as it is. Ultimately, we came down. We got the support here, rallied up, broke down. It's resistance now. Came down to the previous area of support here, right? Rallied back up into that previous resistance. So we're going to see if we can get this 2 and then get the 3, and then we'll be looking at potentially some higher up. But for right now, looking for it to continue lower here, get us ultimately down around 70.5 or 78.6 on that pullback for that wave 2. Would XLE be expected to fall in line with oil? I mean, not exactly. Obviously, XLE is not just oil. XLE is the ETF there for I've got it here. This is old. Okay, let me pull it. Let me just go ahead and make a new chart here. Got to get out of here, guys. Let's see. XLE. I'll do this and then I'm gone. Went a little bit longer than I expected, but it's all good, right? XLE. There we go. So it's that Spider Select Fund there for the energy companies, of course. Let me see. Let me kind of zoom out to the daily here. I mean, overall, if you want to pop in, crude oil futures here on this new price scale, you can see how they align here, right? So you'll notice that there's a bit more movement out of oil, right, than the entire kind of thing here. So peaked out first and then came back up, and that's when XLE peaked out. XLE's just kind of gone solid, it's gone sideways here. Most of the time you'll see this 1, 2, 3, and they'll say, okay, 3 tops. Most of the time, a double top will be a double top, but a triple top usually is a 1-2, 1-2 kind of thing. We talked about that with gold. So so this is expected to head up, and I would say that we're probably expected to head up here on XLE as well. Again, there's your kind of range you got going on there. You got higher lows off that. We got just about even or lower lows here. So we've basically got some bullish divergence showing up on this daily here. We're rallied up into the pivot on the daily, so we want to see an impulsive breakout above that. Jump out to the weekly again. Again, you can see how that's still crazy, guys. That's still crazy. That big old thing went down like -42. I had that. What I think I had like a $3 oil call on that or something. Nobody, I didn't see anybody had a negative oil call. First time ever. We had those contracts settle below. It was crazy. They were paying up to $42 a contract there to be able to sell you oil, right? Paying you to take it. Because remember, guys, when it comes to oil here in the U.S., the West Texas Intermediate crude, which is what we're looking at there with the CL1 futures, the oil itself, you've got to take physical delivery of oil. Your Brent futures contract, Brent, you can take physical, or you can just take the cash equivalent. But WTI, you have to take physical. And at that point, if you guys remember, some like 85 or 86% of the world's oil storage was already accounted for, right? And at the time, I said, what's going to happen is you're going to see a few really ambitious people. They're going to go out there and they're going to buy, they're going to find oil tankers, and they're going to go grab it, and they're going to get paid to take that oil, and they're going to pay a little bit to take that physical delivery and ship it and put it on the tankers, and then they're going to hold it out there for a year. And that's exactly what happened, and obviously made insane amount of money on that. Those are the opportunities. Those are crazy if you're ready, willing, and doing it, right? But yeah, so, again, I mean, this basically, for all intents and purposes, looks like a barrier triangle here, right? The expectations that will break out. Real quick target based on the height here of the pattern. It would be an XLE target, swing low to swing high kind of area. Get us up there maybe about, just a real quick draw here, probably around $133 based on the height of that. So yeah, looking really good. Let's see here. It gives us a 1618. It's a 1618 right there. I mean, this is a wave 4, it looks like, guys. A wave 3, and then this is wave 4 here, or wave 4 here, and we're getting ready to break out higher there. Because that's the 1618 extension, as you can see here, right up there, right around the top, right? So that's going to give us a target up there. I mean, that pattern target's a bit higher. We got an initial target of 116.70, so I'd look at that, and then if we continue up, look up there around 133 on XLE. So that's what I do. All right, guys, I've got to get out of here. As always, remember, the only thing you control in the market is how much you lose, so please keep working on that risk management. The other best advice I can give you guys is stop taking trades just because there's a chance. If you look back and you journal, you'll notice that you're getting a lot of false calls on a lot of bad calls. You're losing money. Even if you're using great risk management, still money that you're losing that you have to make up before you can be profitable, right? So don't enter a trade just because there's a chance. Look for the higher confidence entries. Those are entries where you have multiple confluence of things happening to suggest, so maybe you have like an oversold RSI plus a bullish divergence plus prices finding support on a pivot. Those three things together would be a higher confidence trade setup to go long. So that's what you're looking for. You'll take less trades overall, but you'll lose a lot less more, which means you're a lot closer to being consistently profitable, right? And the trades you take are more likely to win out for you, okay? All right. Hey, you guys, really glad y'all showed up. I see Sats and Silvio and Diego's there, and John and Matt's Trades, Soren. Good to see you guys as always there. That'll do it. So, man, oh man, follow me, subscribe, hit the thumbs up, leave a comment. I tend to answer comments unless you're just a jerk. Then I usually just ignore you. But if you've got a real comment, even if it's not agreeing with what I'm doing, it's fine, guys. It's fine. Maybe you're seeing something I don't. Maybe I'm seeing something you don't understand the way you're not. I mean, the goal is understanding, right? And like I told you earlier, I always try to learn something new as often as possible, especially when it comes to trading. It's the only way you can continue to get better, okay? Don't ever assume you know enough or that you're you know it all, especially when it comes to trading, because you'll just get left behind. All right? All right, well, that'll do it. Join us at members.texaswestcapital.com. We'd absolutely love to have you there. You guys have a great weekend. Trade safe, and I will see you next week. Bye, everybody.